Today in the grain market, soybeans were a little bit lower. That crude oil drop really was impacting futures. The futures did almost get to $17 before we had that 45-cent pullback. There was some talk that China was going to come in and maybe buy some U.S. beans, but that really hasn't materialized right now. Originally maybe that's what traders had liked, but that we're still trying to kind of digest what the WASI report from Friday. The option open interest shows some solid buying in July, really all the way up to the $21 strike. But it's important to remember that the highest open interest is in the November $15 call. And that's a little below the market. So, something to just be thinking about as we go forward. The CVOL right now is at 22.9%, the soybean oil is at 33%, and the meal's at 27.5%. Now, the crush margins are still pretty good right now, so that could be what's supporting the soybean complex as a whole. Today, corn was a little bit mixed. It started out better, and that with that global production expecting to fall really gave the market a boost, and we came within just 4 3/4 cents of the high right now of 7.23 3/4, but or 7.83 3/4, but the market really pulled back a lot, even though money managers did add to their long positions and long up to a total of 362,000 contracts, and that's a pretty significant number. But I think a little bit of uncertainty in the market, uncertainty about what's happening with the stocks that are in Ukraine, I think has everyone scratching their head as what as far as what to do here. But option open interest in the July $8 is 17,000. The July 850s is 21,000, and the July $9 is 22,000 contracts. I think that might be a little bit of an indication of how traders are kind of like leaning to the upside, even though that the highest open interest is still in the December $8 call with 34,000. All those numbers I think are going to be coming into play as we go forward. Now the CVOL for corn right now is at 30.5%. Wheat, though, did jump up. That USDA did cut the export forecast out of Ukraine, and I really rallied the market. We were up 40 cents at one point, and it really broke out of that 2-week channel that we've been sitting in right now. But here in the U.S., there's also extreme dry weather. High winds are expected to impact the winter wheat. The option open interest is kind of migrating to the June, but there's a lot of activity in the July contracts. July $11, and the highest is still the D's $14. These kind of numbers that I give out are significant, and they're going to have some impact on the market right now. But certainly looks like that we might have stayed higher had corn and beans stayed a little bit. When corn and beans came down, I think it brought wheat down a little bit lower, but still up 25 cents for the day. I think that says a lot. The futures were trying to race to that $11 mark before it kind of fell off the edge there. But right now, we're still trying to digest Friday's WASDE report, but be sure that the weather is going to be gaining ground as far as what's the most important market mover as we get closer and closer to planting season.